Well, hi, ladies and gentlemen. I'm just going to mess around with this camera, make sure it's flat. Well, hi, ladies and gentlemen. Thanks for joining me on Good as Gold. We're going to go through some of the charts I'm looking at in the gold market today. Obviously, the technicals and the price action is really key, but some of the sort of relationships and some of the correlations, which I think are really important as well. So let's go straight to it. If you've got any questions, there is a question box to the right. I'll be happy to answer any of those that you have. Obviously, afterwards, if you want to get in touch with me on Twitter, Chris Weston _PS, and I can sort of go through anything that clear up any issues that you may have. If you do find yourself liking this, obviously give it a like. That'd be awesome to see as well. Okay, so starting off, we're going to go straight to the big picture in terms of XAU USD, in terms of gold in US dollar terms, which of course is where we see most of the flow. We're still looking at this big level here at 1833. That's the big level that we're looking for in the weeks ahead. It's not going to happen overnight, if at all, but certainly that's the level that you're really looking at. Yeah, this is going to be really big resistance levels. Obviously, if that ever goes, that's going to be one that's going to excite a lot of people. That's going to be where you sort of buy strong and you sell stronger. You buy high and sell higher. I think that's the really big level you're seeing at the moment. Now, last week we looked at this downtrend that's been in place since June. We got to those levels. We broke through it. You can also see, that's also the 50-day moving average there. So that's again come into, let me just double check that. Sorry, that's the 100-day moving average. You can see the 50-day moving average is this red line here, but you can see the 100-day moving average is also blocking, holding up play, and it's sort of around this kind of level into sort of 17, around basically into the figure last week. We had this a bit of a rejection coming through into the round number, but also you can see it failed to close above this downtrend. So that's something that we're now back retesting. If we can get a close above the downtrend, that doesn't necessarily mean you're going to get a significant rally in price by any means whatsoever, but it does say that the downtrend that we've been seeing, which you can see has been capped into this nice double bottom around 1718, is going underway. There's really clear buying pressure if you take a longer term view in the gold market. You can see that there's great support. You can chuck all these various factors, moves in real rates and all these kind of factors, stronger US dollar at the gold market. And we can see that there is pressure building. Is it going to go one way or the other? We don't know. But a break of this downtrend would be, I wouldn't say significant, it would be positive. Of course, it would be. It doesn't necessarily mean you're going to get an explosive move to the upside. But it does mean that this row of downtrends, of lower highs that you've been seeing will give way. We really need a break of 1800. And then I think you've got really strong confidence there, because some of these short-term moving averages will be trending higher, that we get into 1833. That's going to be the level that I'm going to be watching very, very closely indeed. Will we see markets reject off that? And obviously what happens with real rates, that's going to be the big one there as well. So things are looking quite constructive. You had this move lower. You've kind of got this it's kind of like a head and shoulders pattern. As one viewer pointed out last week, head and shoulders patterns are reversal patterns. And you really need to see them at the bottom of a downtrend, and a significant downtrend, to show that they're going to start something more powerful. You could say this is the bottom of a downtrend, but you can see that we've broken through this smaller head and shoulders pattern, and that does argue that we go up to 1833. So I think if we break through the 100-day, we break through the downtrend, then your target's 1833, and you trade it up to that level. And of course, that's where we're going to be looking for supply to come in for what is obviously the big level coming through. The trade of the week has obviously been to be long of gold in the weakest currency, and of course everyone's been shorting the Japanese yen. We've now got to a point where people are looking to buy the Japanese yen, so things like Aussie yen, it's rallied 14 out of 16 days. I think we've seen a situation now where the RSI on Aussie yen, let's just have a look at Aussie yen. I'm just going to bring that up, and I'm going to go sort of big cross asset again, just in terms of what we're seeing here, because Aussie yen, look at that, it's just absolutely crazy. Now I would be looking at tactically being short Aussie yen right now, back testing a scenario where if you put an RSI on this right now, we use 14-day, but we could use a slow one. You can see it got to 81 now. 83. My analysis suggests that in the last 20 years, whenever we've got to an RSI above 81, we've seen 9 occurrences of that taking place. and 8 of those 9 times in the next 3 days, the Aussie yen fell by an average of 0.9%. Now, if you marry that up with this reversal path candle that we can see here, if this kicks lower, I'll be looking to go short there, and I think being long, or certainly being long of gold in yen probably would be something that I'd look to reduce that exposure for. But I think there's a tactical trade here in to be long Japanese yen after what's been an absolute collapse, from these levels. I mean, look at euro yen. It's up 10 days in a row. It's not obviously every day that you see euro yen up 10 days in a row. You can say the same with Kiwi yen up 10 days in a row, Noki yen up 10 days in a row. It's like you're going to a blackjack casino, like going to a roulette table and seeing 10 blacks in a row. You're obviously going to go, the probability is that I'm going to go red right now, but that's where we are now. And obviously you can put a bit of a science by looking at some of the oscillators as well, but that's where we are. So going back to our good friend gold, the idea of gold in yen terms has been a fantastic trade, because obviously, if you get any asset and you translate that into a weak currency like the yen, you're going to do pretty well on the back of that. Even something that's going sideways, the weakness in the yen, if you're buying that asset in yen terms, is going to do quite well. For me right now, you've got this nice double top in play, or this clear resistance into 240,000, 204,665 yen, effectively. Do we want to be short into that level now? Perhaps. Certainly very aggressive trade, but I think shorts, given that I think the yen has some tactical short covering to come through. And then maybe look to add on a move below this pivot here. This I think probably could make some sense. I'm still structurally quite bearish on the Japanese yen, given that the world has priced in interest rate hikes, and certainly midweek earlier in the week we saw an absolute volatility shock coming through in the front end of the treasury curves, and certainly in the rates market, and you are seeing this ever widening divergence playing through now between interest rates in so many developed markets that's leaving Japan behind, and Japanese pension funds are moving funds aggressively out of Japan into places where they can get high yields and high real returns at the front end. So certainly the Japanese yen has been one that we've been looking at very, very closely. We still think there's some downside, but short term, ultra short term, it's not every day that you see this run here. So certainly looking at what gold's doing there. Does that mean then we can take long positions in gold in US dollar terms if we think dollar yen's going to perhaps have a little bit of a pullback in the short term? Perhaps, but I like my trades to show me, come out, Chris, come and get me, come and compel me to take a position. And I want price to really sort of come through. So I want price to really close above this level here. You can see here that we break through there, but the sellers smacked it straight back down there and it couldn't close above that level. So I really like to see, when I'm trading on daily charts, a daily close above that time frame before it ticks the next bar. 4-hour charts exactly the same as well. So definitely something we're watching in that regard. So yeah, for me, like we're in kind of this situation where it's looking really good, but we just need to see a little bit more emphasis to push us through. You go into in some of the cryptos right now, crikey, they look absolutely phenomenal. Let's have a look at DOT. Now, I'm not sort of taking away from the gold heads by any means at all, because I know there's a bit of a turf war going on. But this DOT looks like it wants to sort of creep high a little bit at the moment. Stephen, I'll finish off this one, and we'll go to sterling yen in a second. We've got Doge really needs to get above 26. That's looking all right. Let's have a look at Dash. See, Dash is looking all right as well. I mean, I know a lot of people don't like Dash, but you can see here we've got this really nice sort of move up. It's gone sideways. It wants to creep higher. We've gone through to the next bar now. Can this kick up? If this starts moving up, I'd certainly be going along for the ride as well. BCH. Again, another one there. It looks like it wants to kick up off this moving average here. Again, if this starts moving higher, I'd be certainly looking to go along for the ride. ADA, there's a nice triangle pattern in play here. You can hear very basic. I'm not a big fan of triangle patterns by any means at all. But you can see that this consolidation pattern is building. If this kicks up, again, another one for the radar. Everyone's been focused on Bitcoin after making an all-time high. Again, a big trade one. It's a bit overbought at the moment. Pullbacks are a buying opportunity in that one, I think, in the short term. Okay, let's go back to our good friend gold. And immediately what I'm going to do... Sorry, Stephen, let me just go to your sterling yen. I take the same view on sterling yen. Sterling yen's... this is a yen trade. This is not a sterling play. If you want to have a look at what sterling's doing, I'd certainly be looking at something like euro sterling and seeing what's going on there. And the sterling looks really nice at the moment. I mean, it's probably a little bit overbought, a little bit oversold, similar to sort of euro sec. Some of the other euro crosses if you take out the yen. Yeah, it looks like this might want to push a little bit higher in the short term. Sterling's this move's a little bit overcooked, but I'll be looking to sell rallies in this pair in that situation. But to answer your question in terms of sterling yen, have I got it up? Yes, I have. Yeah, this is just another one. I mean, we saw that up I think 10 out of 12 days or something. And again, a massive move higher. But this is not a sterling move. This is a yen move. The yen's just universally just moved higher or moved lower against these pairs, and it's really been picking the higher beta one and going along for the ride. Policy divergence is real, but if you have a look at the Bank of England, we're looking at a situation now. Well, let's have a look at the rates market. Let's go and have a look at my Bloomberg terminal and see what's being priced in terms of the UK at the moment. Okay, so we go into the 4th of November meeting, day before Guy Fawkes night. It's my headline writer's man coming out now. It's going to be an explosive day the day before Guy Fawkes night. 79% chance of a rate hike in that meeting. You go out to the December meeting, 16th of December in the UK, and there's one hike being priced in, but there's a 43% chance of a second rate hike of 50 basis points by that time being priced in. I don't think that's going to come to fruition. I think we get a 10 basis point or 15 basis point and maybe 25 at best. But I think the rates market's got a little bit excited in terms of its pricing around that. And, we've got a bit priced in through the curve. But yeah, right now, I think this is one that, again, looks like the sellers are kicking in. And given the move that we've been seeing here, I think this could be one where you end up seeing sort of everyone sort of rushing for the Dexit point at one time. If there's an adage in my world, that says if you're dancing in the disco and the fire breaks out, you want to be the one closest to the exit door. And I think after this kind of move, there's a lot of systematic players in there, people who've been buying because it's going up, trend followers, if you will, CTAs. And their rules haven't been broken yet. But I think there's going to be people going, it's had a big run. Everyone loves this. It's, the yen's just in the doghouse at the moment. It's that ugly child just, not looking great. And, I think it's time to take a bit of profits off that one, and everyone's going to rush out at one time. So that's certainly one to watch. But back to look, in terms of the gold market, let's have a look at what's actually making it correlate here. We've got the correlation matrix with some of the key markets, just to tell you what, fundamentally what is actually making gold tick. And you've got a situation here where gold has a negative correlation with the dollar index at 0.35, a positive or a negative real relationship, a negative relationship with the 10-year real rate or inflation-adjusted tips. Over the last 20 days or so, we've seen that correlation effectively at 0.73. Is there anything higher than that? No. So in terms of the last sort of 20 days, the strongest relationship with gold, as you can see there, is a negative relationship 0.7 with 10-year real rate. So we know that's really been, what's driving the gold price recently. So we can have a look at real rates. And what we do is we break that down into inflation expectations, which are the blue line here, and we can break that down into nominal treasury yields. And as you can see, inflation expectations have been absolutely blowing up. This is a big worry of the market. It's a big worry of the market because you're concerned that inflation's getting away and central banks are going to have to raise, and they're going to have to raise into a world of supply shocks. This is not a demand shock that's causing inflation. This is most prominently a supply side shock. So raising interest rates into a supply side shock is going to potentially hurt the economy. So that's the concern that we've got in a sort of a macro sense. But you can see that inflation expectations have been pulling away reasonably from nominal treasuries, and that's kind of kept real treasury rates fairly well contained, as you can see there. So you can see that the real 10-year treasury is negative 94 basis points. If we were really feeling good about the US economy and global economies more broadly, that real rate would actually be moving less negative and closer towards zero. That's not been the case. So it's good that inflation expectations are moving higher. That's always a positive for markets, but it's been caused by factors which are not going to be controlled by traditional monetary tools like interest rates. So that's something that we have. So look, if we look at the 10-year treasury there, we can see it's sort of moving sideways a little bit in the short term. What does that mean for the gold price? Well, you can see here that 10-year treasury inflation adjusted is at the bottom one there, and you can see that it's kind of been meandering a little bit down. We had that little bit of a spike lower in terms of real rates. It's come back a little bit. You can see how gold's reacted on the other side there. So you can see the negative correlation that they have. So real rates have moved higher, gold prices have moved lower. Real rates have moved lower, gold price have moved higher and vice versa. You can also see what's happened with the dollar. The dollar seems to have sort of broken down from this correlation here, the US dollar. The US dollar is sort of not really understanding where to go, but we can see there's a very strong relationship both statistically and visually with 10-year real rates. So my advice is really just go and have a look at the TIPS ETF and actually put that on your radar, because that's really what's driving gold at the moment. We can see that 74% of the variance in gold is driven by what's happening in the bond market. Okay, in terms of what we're expecting for the week, I think it's interesting that if you have a look at volatility in the gold price, it's picked up a little bit. You can see here 1 week implied volatility has picked up to about 13%. It was sort of trending a little bit lower. This is driven by options pricing, and you can see it's ticked up a little bit here. The expected move over the coming week is 33. So if I actually just change that to... let me just change that to what it should be. See, there you go. You can see a situation where the weekly implied volatility is 13%. It's not particularly high. It's had a little bit of a tick up, but the implied volatility, the expected movement over that time frame using 1 week options, is still pretty low. That gives you a move up or down in terms of the break-even level which you can trade on in the options world of $33 over the coming weeks. So what I've done is I've created these straddle bands effectively that tell me within the next 5 days where price is likely to find some resistance, and we can put a level of confidence of around 68% on that. So this is the most forward-looking indicator that you can get in the market. So we're looking forward, and we can see into 1812 and 1759 is your levels there that we're looking for potential fades coming through. So not quite up to the 1833 level that we're looking at, but that's probably over the next 5 days. It gives you a sense of movement, and are we going to get to 1833? It doesn't look like it at the moment. So 1812 is probably the level that we're looking at on the gold price, where we're going to be looking for fading moves. So that's something I'm going to draw on now, and we'll revisit that next week. So put a line here. 1812. Move it up a little bit. Okay, cool. So that's on the upside there. That will just be my sort of statistical level there in terms of how we're looking at the gold market over the next 5 days as well. Looking at the calendar over the next 5 days, not a huge amount to really worry us, to be honest. So again, we're looking at that oil price. If oil prices continue to move up, it's going to push inflation expectations, which, as we know, is going to have a big impact on real rates, which seem to be driving the gold price as well. So just to confirm, everyone, we're looking at a situation where the market has been really buoyed up by, moved around by what's happening in real rates. Real rates have been really affected by what's happening in inflation expectations. Inflation expectations have been really moved by what's happened in that US crude price. We know that buying gold in yen terms have been very, very good, very great trade to be in. I'm certainly looking in the short term at maybe taking some off the table and looking for a little bit of a reversal with some of that yen strength. Yen weakness turns into yen strength as a tactical basis as well. So one for the radar. Let's see how it pans out next week. We're looking for that downtrend to potentially give way. If it does, we're potentially looking for 1812, see how markets react into that level. And longer term, we're still looking for 1833 to play out. Just to confirm, everyone, everything that I've said today should be considered general in nature. I haven't taken anyone's situation into consideration. Please do not consider this to be personal advice. And obviously consult a financial advisor if you're looking for any kind of trading ideas or anything like that. So please do not take anything I've said as personal advice today. Anyway, thank you all for coming. Thanks to all the viewers. And if you find yourself liking this, please hit the like button as well. But certainly looking for that downtrend to give way. If it does, then certainly looking for a move up into 1812, see how price reacts in there, and potentially up to 1833 over time, potentially in dollars, but I certainly wouldn't be looking so favourably in yen terms right now. Anyway, thanks guys. Thanks everyone for watching, and hopefully see you next week.